Neil, thanks so much for coming on the show. Thanks so much for taking the time. There's quite a few things I'm super excited to talk to you about. And, we always need a good tax guy. So, someone with your unique expertise, I think is going to provide a lot of value to people, especially people who are starting to make money in their career. And it kind of creeps on you where, it's like you have one job to make money and then you have another job to build wealth. And it takes time to jump on that wagon, so we're going to have some fun here today.
No,
um
absolutely.
yes, and for
Thank you
everyone
for
who
having me,
doesn't
Michael. No,
yeah,
absolutely. Looking for, yeah, actually looking forward for a great time. Absolutely.
of course. For those who don't know, Neil Jasani is a he's previously featured on Wall Street Journal, CNN, Forbes, Inc. magazine, CBS, NBC, Treasury and Risk, and Fox Business. He is the founder of Neil Jasani Tax Advisors, a boutique firm helping high income earners navigate tax planning with clarity, confidence, and a personalized approach to protecting their wealth. Prior to Neil Jasani Tax Advisors, Neil launched and sold successful businesses and is the author of the best selling book, Win the War for Money and Success, an investment guide for long term savings, financial growth, and retention. So, Neil, first and foremost, let's dive into your backstory. What inspired you to start Neil Jasani Advisors, and what personal experiences shaped the way you approach wealth and tax planning?
So I've been in this business since I immigrated to this country. So I came into this country in 2000. I always done the tax and investment, and that's what something I really loved it. And more I did that, one more I realized that unfortunately, that people who are hardworking, who being the good student who go to the to good school, and then they become very good employee, and they actually work hard, and when they start making money, government comes and say, "Hey, looks like you're smart. You are making lots of money. Let me tax you," and they will take their money. On the other side, let's say if you were to be that, kind of lucky sperm, and you become, Elon Musk, or Warren Buffett, or
Lucky sperm, I like that. That's
something,
funny.
right, just something like that one. Then that does actually you can decide how to take your income, and that does actually Warren Buffett said so many times that his secretary, the tax rate is higher than his, basically. So, and on the other side, let's say if you were to be a bozo, you never went to school, you are not working, then obviously government is going to take care of you. So, meaning somehow it feels like that one, that if you're being a good student, if you're being really good employee, then you are really punished for
Right,
being a good person in a life and paying almost half the money in taxes, basically. So that's
right,
where the my story comes, is that we need to figure out every ethical and legal way to save the money whatever we could. And that
right.
unfortunately so many high income earners, especially W2 earners, somehow they've been brainwashed that nothing can be done. I mean, you go to your CPA and say, "Hey, why I'm paying so much in taxes?" And your CPA say, "Hey, you've done, yourself very well. That aren't you happy that you're making this kind of money?" And that's the answer, basically, rather than come up with some strategy that will help you save money in taxes. So I think that is where my story comes, is we need to figure out. And that I think that is where the title of my book is, Win the War for Money and Success, in sense that you are the group who's paying the highest percentage of their income in taxes, basically. So that's where the entire story started. Obviously I have changed the that other actually domicile from New Jersey to Florida. So I started the Florida Corporation, which is Neil Jasani Advisors, but essentially I did the same thing for last 24 years.
Very cool. And I love that you touched upon that because, it is a bit of like a double-edged situation where the people who do make money, they don't realize that you have one job to start making money where you put in hard labor and the dollars come in, but then you have a second job, is what do you do with that money, right? And when you have a limited mindset, you don't realize that wealth is a whole other set of challenges, investments, taxes. It's a whole other ecosystem. And when you are reaching a certain tax bracket, you got to realize that the laws get more complex. And that's a double-edged sword too. If you understand the laws, you can leverage them to your advantage. And you said it ethical and doing it just and correctly. You have options. And when you're in the lower end of the tax bracket, correct me if I'm wrong, it's a pretty binary situation. You make your money and the tax, it's pretty simple. But and people don't realize how someone like you is so essential for their own success. And they just think, hey, taxes is this static process. It's really not. It's a very complex process. So how do you break that down to people? Like, you know, how do you make them realize there's so much good that I can offer you? I'm not just a guy who's punching in the numbers and keeping the IRS away.
I think that's where the some sort of awareness issue, I guess, that's what it is. And that if you look at the tax and accounting industry is changing very rapidly now because of social media, because of internet. Earlier, what was there is that actually you used to go to your CPA, you take, your shoebox and you give them, and that guy will, pop the return out basically. But now, you might be enjoying your actual Facebook or actual Instagram or the actual TikTok, and somebody like me comes and say, "Hey, you can save money in taxes," and now that guy will go back to his CPA and say, "Hey, I heard on TikTok that I could do this one," and they say, "No, it can't be done," because unfortunately, what happens is there are almost 750,000 CPA. There are some, actually 50,000 plus, enroll agent. And if you look at majority of them are older folks because there are no new inflow that nobody's waking up and say, hey, I'm going to become CPA. Because if you look at the job or the industry has become really, really bad. I mean, that you have to work really hard. Clients are not very appreciative. There's always deadline. So that unfortunately this people, the normal CPA has anywhere between 200 to 350 client, basically. I have seen some CPA has, 1,000 plus client. So you can just imagine that how in the world this guy is able to give some time to learn new strategy or
Right.
spend more time with the client. What that guy is doing is that guy is actually pumping the return. So unfortunately,
And
that has been,
yeah,
go
sorry
ahead.
to cut you off, Neil. Just you're making a really interesting point. And also, the more clients you have, the more systematic you have to be in order to scale up. So your individualization starts decreasing inversely to the amount of people you bring on board. And there's not too many guys who can do the job like Neil. So at some point, it's like you can't necessarily delegate certain things. You're one guy, and you've got ability to handle X amount of traffic. So yeah, I completely agree with what you're saying.
No, absolutely. And that other, we are currently 50 people. So that other, our size is actually more than 50. We have a less than 500 client. Okay. So 50 people, we have 11 or so tax attorneys and, 12, 15 CPAs and other EAs and other advanced tax planners. So you can see the advisor to client ratio.
Right.
So that is very, very important. That's where you will able to spend some time. You would be able to learn. You would be able to, actually come up with a new creative strategy. And that actually the U.S. tax code is very, very complicated. It is 75,000 plus pages. So that you need to be really good at, and that the one person can't, should possibly know everything. So I think that's where the team will come into play, basically.
So let me ask you this, Neil. You have a very individualized approach, very customized and personalized approach to how you deal with taxes. So how do you both get new clients and maintain the unique value that makes you different than other tax accountants?
So I think this is one is actually twofold. One is you need to charge right. The issue is in the industry is you are not charging right, basically. So that
Hmm.
meaning when you charge very little, that unfortunately you need to get many, many clients,
Hmm.
basically. So here our approach is take the right kind of client. So that's why we accept who's making at least $2 million plus. We do
Hmm.
not accept the client who makes less than that one. So that now you have lots of room
Interesting.
to make a substantial impact on their taxes. So when you're making substantial impact collect on a taxes, you have a right to charge them a fair fee. Once you get a fair fee, at
Correct.
least that you can hire the great talent, because end of the day, you understand, you've been in that actual technology. It is all about people. It is all about, that
Right.
the talent. So that actually you can hire the best tax attorney, you can hire the best CPAs, you can hire the best, strategists, basically. So that is number one. And if you do the job right, then you will get the referrals, basically. Obviously, you need to do some other marketing as well, so
Right.
social media, that internet, SEO, you need to do all other things as well. And that actually you need to spend a little bit money here and there. But end of the day, if you deliver the value, people will come knocking your door. And that I think that is what we are seeing, is that, we do get lots of actual referral because our client understand the value. So they actually keep referring, and that's how we are growing, basically.
Right. It sounds like you're just doubling down on quality as opposed to quantity. And uh and as long as you have this unique advantage over your competitors, I think as long as you stay in that ecosystem where the value you're offering is unique to your competitors, then you can slowly and carefully build up. And I find that a very good and interesting answer. Now, Neil, I've been wanting to ask you this. So, you know, it sounds like what you do is really customized and you're always trying to stay ahead. I mean, I think you see the death of complacency that lives in the bureaucratic accountant ecosystem. So, what's your perspective on kind of the advancements of AI? How AI is going to help facilitate, get clear cut answers for tax and accounting purposes, and the risks that come with AI automation.
Sure. Uh, that I use these quotes, I guess, actually Bill Gates said that one, that we overestimate the impact of new technology in a short run and underestimate over the long run. So I probably believe the same thing, that what is going to happen, the AI is going to massively going to impact, but it is going to impact more on a tax preparation side. What we do is a tax strategist. That's where you really needs to know the stuff. You need to research. So that am I worried about the AI? Absolutely not. Can the other, CPA community, those who are not keeping up to the that actual technology, and those who are not in advisory space, obviously their job is going to be easily going to change, basically, because
Mhm.
actually machine can do much better work. Nowadays they are way more smarter, so that is going to change. But for us, that we personally believe that the AI is not going to change whatever we are doing. That's been said. We are very, very pro technology. In fact, if you come to our office, and that actually you would be able to see, we don't have the filing cabinets, meaning we are 100% in cloud. You would be able to see we that embrace every technology, that we don't buy any free software. We buy the premium software. We use that one. So that, that our approach is, that we live in meritocratic society. Who is going to win? Who is going to be outsmarting the other guy? So
Correct.
that is what is our approach. So that we spend money, we learn that one, but the actual kind of work we are doing, I don't think so. It's going to change anything, at least in that actually short run. But the other CPA work who are doing the tax preparation side, meaning which is actually putting the numbers in the right box, basically, that is going to change very, very rapidly in the next few years.
Neil, I have to say, I truly appreciate your mind. You don't see this forward thinking, open to change from people that are of a higher generation than us. People generally get locked in their ways. They find what makes them money. They stick to it. They play it safe, and they grow in that linear fashion. It's a slow and steady inch upwards, but they're not hitting those exponential rates of growth. And I think someone with your wisdom mixed with your openness to innovate, I think that's just a beautiful recipe for success. And I think, and I wonder, like, what advice would you give to those starting their journey in accounting?
I would say stay hungry. That actually one need to be hungry. It did start with that one. I think you did mention also in the past that it is all about how you think, right? It's a mindset. So that number one, you need to stay hungry. You need to, open to the new ideas, because I learned very, very earlier on, there's no monopoly on a best idea. So it could come from anywhere. So that you need to keep your eyes and ears open, basically. And the last one is you need to be fanatic to become best in your industry. Whatever you do, it could be tax, it could be accounting, it could be law, it could be engineering, it could be anything. But you need to be obsessed to become really best in your industry. As long as you do that one, meaning you stay hungry, that you open to the idea, you have that kind of obsession to become really best at what you do. And the final is, if you are willing to put those efforts and stay ethical, I think that it's not as difficult as sound. Anybody can become very successful and make a lot more impact on the earth, and they can also that other make good money while doing that one.
Yes, good answer. So, Neil, I wanted to pull this back to AI for just a moment. So, we were discussing how AI can, I asked you how it can possibly influence your ability to navigate from the outside. Introspectively, looking at it from the inside, at least how I operate my day to day, I always try to say, hey, Michael, like, what do you do that's super unique? Triple down on that. Everything else, you should look at it as noise. You should find a way to patternize it and delegate it. Now, internally, how do you feel even something like a natural language processor like ChatGPT? How has that helped you discover, hey, this is this part of what I do is super, super unique to me, Neil, and this is what I can actually start delegating down or create training guides and start hiring trainees. And I want to just quadruple down on this element of myself that I can't replace with AI. Have you got that feeling, and have you made that separation?
We do, and that actually, as you mentioned, no, that we are actually very cognizant, and we do use AI as much as we could. In fact, I tell people in our office that if our motto is in our office, if that somebody else can do whatever I can do, I shouldn't be doing that one. Simple as that, right? So that actually we do have
Uniqueness
that one.
factor.
Absolutely.
Yeah,
You need to have that courage to that other, should delegate. It's not easy. And that other, you need to be careful as well. But that other, you need to learn that skill. So that similar way that we do use AI as much as we could, so that some of the areas, it is way more smarter. It's like, when the first, actual calculator came in, remember we used to do the manual, then we utilize the actual calculator. And now obviously actual actual computer comes and, they do the other calculation. Now we are in a total different world, the AI, so that we do use quite a bit. And that, in fact, in actual tax preparation side, I personally believe it is going to change dramatically over the next 4 or 5 years. You will not need that many people to do that job. That's been said that we are, actually, we are kind of unique because we deal with really ultra high income earners. So it is very complicated. AI or the systems or that will always play the role where they can really expand quite a bit, where the large market, there's a large number of users
yes,
versus in
exactly.
the our case, it is a very small number of the people that we deal with. So for us, there's always going to be room for the creativity and some manual work, but that I personally believe that generally it is going to change quite a bit. I mean that there's so many people who are doing the tax preparation work now. I don't think so they need to do that one. They would be able to do some other value work rather than
Right.
plugging the numbers in a box.
Right. And yeah, and to complement what you're saying, if you think about it, all that like natural language processors like ChatGPT do is they collect, think of it as being like your amazingly awesome average B plus student. It'll collect all the information that's out there, and it'll give you that mean value, that safe value, that consensus, that value that holds a consensus. And if you think about it, in some capacity, when someone wants to gauge the threat level of AI towards their industry, they want to see it as like AI is going to be a really good job replacing and competing and threatening people that are average and below. And it's going to give a stronger advantage to people who are doing exceptionally unique, exceptionally specific, a really high uniqueness factor content level work. And I think someone like you mentioned right away, very confidently when I asked you, is AI a threat to you? You brushed it off as like, definitely not at all. It's a weapon that I'm going to put in my arsenal. And I think it's because you have that understanding that really to thrive in this industry, it's not about coming in there with a shotgun. It's coming in there with a surgical knife and doing extremely unique work and making yourself irreplaceable in contrast to your competitors. And one of those competitors would be ChatGPT. So, yeah, I strongly resonate with your perspective and your mindset. Now, I wanted to shift to one quick question here. So, someone is just, I asked you about students. I want to ask you about someone who might not necessarily be at $2 million. So, they might not necessarily be a client for Neil, but they want to and they aspire to be a client for Neil and they want to start making more and more money and reach that $2 million benchmark. What do you recommend your top 3 tips for them to make the right tax decisions from the get-go?
So that other, you can put these people in two categories, right? One is those are actually W-2 earners, meaning those are working for somebody.
Wage.
And the second one is essentially, actually business owner, basically. So that actually, let's go one by one. So that actually W-2 earners, unfortunately, there are not many strategies you can put in because you are employee and you are not employer. Versus, if you work for yourself, then obviously you do have a lot more other strategies you can put it. And that if you look at the internet, most of the people are talking. That is all strategies they are talking primarily for the actual small business owners, basically, right? So that for example, Augusta rule, or hiring your children, or buying G-Wagon, or here and there, you will hear that one. But that is all applicable to people who has a business. But somebody who is working for somebody and making W-2 income, there are not many options available. So in that scenario, what they can do? So they can do a few things. Obviously, they do have a 401k. They do have actually backdoor Roth. They are doing it. But on top of that one, they do so many other strategy as well. So that basically they can do something called the depreciation based strategy. So meaning something, either in a form of the real estate. Real estate can be used in a two ways, either, actually short-term rental, or it could be long-term,
Investment.
actually rental as well. And you qualify your spouse if possible, real estate professional, basically, and that you do take the depreciation. So that is what is one way. Second way is you can utilize some sort of, equipment or some other things and actually depreciate them, basically. Now, when you are W-2 earner, there's actually something called the business loss limit. So that 461L limit, which is 626,000. So meaning if that other actually husband, wife, both are, making, let's say that they're somewhere around 600,000 or anything less, you can do any of this kind of actual depreciation strategy and you can
Mm,
make your income literally zero, basically. So you
mm,
can go. Now the issue comes is, let's say if you're making $5 million or the $2 million or the $3 million W-2, now the business loss limit is 626,000 in the year 2025. So you can't take more than that one.
right.
You can say, hey, I can buy 10 apartments, but still the IRS says you cannot take more
More
deduction
than
than the
620. So that's a whole
626,000.
different ecosystem now. So you've knocked off your first 620K, but then you have other stuff. And then even like with like a SEP IRA, you have like $50,000 and then you're
Yeah,
out,
yeah, yeah.
right? So
Correct.
it's kind of
Correct.
like this like tiny incremental step forward of chipping away. Yeah, and really, I know this is a vague question, but someone's saying, "Hey, I'm working for myself. I'm starting a company. Do I do an LLC? Do I do an S corp? Do I do a C corp?" What would be your quick answer for them? Because that's a question that actually I get my way a lot. Saying, "Hey, I want to register a company. Which one do I register?" I'm like, I'm not an accountant, but
No, that is one. So that actually that one is actually way more complicated, actually question than that other actually people think. Basically, it depends on so many factors that are actually what kind of corporation should I start. So that actually basically we say, let's say that actually you understand technology and you have started actually many and so on and so forth. So let's say if you're really building high growth company and you're planning to take money from the investor and so on and so forth, then that obviously you want to start as something called C corporation, and that you want to probably choose, actually Delaware
Delaware,
jurisdiction because
Delaware,
it's very easy.
Nevada, or Florida, right?
Right, yeah, but if you want to do the tech startup, you want to use the Delaware, and the reason you use the Delaware is that it's not anything different. It is the only reason is that they are very fast, very efficient. It's very easy for you
And
to
very
sell
corporate
the share.
friendly.
You're right.
Yes.
That's one. Also that actually when you're going to do that one, you're going to end up doing some option full for the employee, right? You're going to give it to the employee, so that actually, actually Delaware C corporation is actually perfect. But let's say you're not looking to build some high growth company. Let's say you are,
But
you
sorry,
are
Neil, to cut you off, but
sure.
if you're looking to take profits, just a very, I know that's an oversimplification, but your C corp is subject to something called double taxation, right? So if you're looking to invest those earnings, I would imagine a C corp might be a good idea. But if you're starting out and you're young and you're pulling those profits, wouldn't you prefer to do a pass through corporation, something like an S corp?
S corporation, absolutely, yeah. So that actually that you do C corporation when you are really planning to make money at the exit and not
Mm,
milking the cow, basically.
I
If you're
see.
planning to milk the cow on a daily basis, then you do something called pass-through, right? Which is S corporation, basically. So that is where you can do. But, at the time, obviously, that you are looking to make money now and you're not looking long-term in sense that I'm not looking to make money at the exit. This is high EBITDA margin business, and I'm looking that one S corporation is a way to go. And that other, let's say if you're, really starting some actual side gig, then probably start as LLC. Don't worry about the S corporation. Once you reach as $100,000,
Right.
$200,000 or so income to the corporation, then probably you make the election as a S corporation, and that is what the way to go. And then you would be able to put in all of that actual strategies at the S corporation. But that if you're looking to build something bigger, and that it may happen, that other you try to build something bigger and it ended up becoming actual lifestyle business, then you can
Right.
always actually switch back from that other actual C corporation to S
Back
corporation,
to
and that other
correct. There's flexibility.
right. No,
Yeah.
absolutely. And that actually similarly, vice versa, you cite something as the actual side gig and that worked out and you made a selection. And now you see that, man, looks like this business may be 20 million. It might be 50 million. It may be 100 million. Then obviously you can convert it from S to that actually C again, basically.
Thank you for that information, Neil. Now, segueing on to, I know I asked you what advice would you give to someone who's just starting. But what about someone who's closer to you, to an ideal client for you, making 1 million, inching towards 2 million, and he's kind of like knocking on your door and you say, Neil, I can use your services. What's like the number one thing you say, hey, like this is the first thing we should attack. This is the first perspective shift you should have. What's your first piece of advice you'd give to them?
So that our approach is really holistic because that tax, you can't really look at that in the piecemeal, and that is how the most people look at. If you look at the most CPA or most accountant, they are not forward thinking, because if you look at the lifespan of the client is somewhere around 5 to 7 years, and that how do you judge the new CPA, right? I mean that actually when you go to the other CPA, how you're judged? You're judging that how much, this guy has helped me get the tax deduction now, right? So
Mm,
meaning, and the accountant or the CPA normally look at that one. I don't care what happens in after 5 years, 6 years. I'm just going to show this guy tax savings now, basically. So that is the normal mindset or the approach you are going to see. Our approach is different. We look at the taxes holistically. So meaning
mm,
we don't only help them save money now, but we also help them save money at the retirement time, because ultimately what is the purpose of making money, right? Is that you want to use one day when you retire, basically. And the third thing is whatever money that you are not going to be able to utilize during your lifetime, it is ended up going as inheritance to your family, basically.
mm.
So that actually we look at holistically, that we help them reduce taxes now, we help them reduce taxes at the retirement time, and we will also help them reduce taxes at the actual transfer time. And historically, Michael, most people don't know that actually we laugh and actually talk to the client and say, I know you came in because of the taxes, but historically, if you look at, historically, right? So that income tax become permanent under the 16th Amendment in 1913. So if you look at from 1913 until now, if you look at the top marginal, and that I'm talking only federal, so top marginal federal tax bracket is somewhere around 58% basically. So if you look at the moment that the federal
They want to
highest tax
increase
rate,
that.
yeah, it is
They
actually
want to take everything.
37.
If you make money, give us everything.
So meaning historically we are living at the lowest that actual income tax environment, even though it feels
Right.
that worse to paying taxes. But so idea is that it may happen. You might retire after 15, 20 years, that other actual income tax rate might be 50 at that time. So we want to make sure that we
Right.
plan properly, basically. So not only we plan for now, but that actually coming back to your question. So we look at the depreciation strategy. We look at actually charitable donation strategy. That you can create a foundation, you can create a trust, you can do so many other strategies. That is very, very powerful, especially if this people has some highly appreciated asset. They might be having highly appreciated stocks or RSUs or the options or maybe the actual real estate or so on and so forth, and that it could be one of the wonderful strategy they can do. So that we truly look at the overall, and that we do use some other actually very, very creative actually very, very creative society. Very, very creative strategy, I'm sorry, where you can take the multiple use of your money, basically. So
Mm.
we put the money in a motion. It has been said that actually money in a motion creates more money. So you want to take multiple use of your money.
Money working for you, as they say. Yes.
Exactly. So that actually we do quite a bit that actually advanced work in that way. So there's so many strategies comes that are actually in a play.
Yeah, I would love to talk about money investments another time, but your answer was great. It kind of said, your answer in short was, the question itself was a bad question because there is not one piece of advice. It's a holistic, it's a surgical, it's a larger picture process. And that mentality of like, hey, what's the first thing I can do is the archaic system you're inherently looking to avoid. So my question for you, Neil, is now, where do you see yourself in 5 years?
Um, I would be the same guy. I laugh. In our office, we laugh that for me, best death is my colleague call my family and say, "I seen Neil in the morning. That he was in the kitchen. Actually getting coffee, and now I go to his office and he's dead." So that I enjoy what I do. So that I would be continue working, but at the same time, I do see lots of opportunity in our industry. So that actually we are growing very fast, and that actually I personally believe there's a tremendous opportunity. I believe in the actually abundance mindset. So there's a lot more opportunity. So it's not only Neil Jasani advisor. There could be many Neil Jasani advisor, and that everybody can coexist, and that everybody can create tremendous value for that actually actual client, and they can also make lots of money. So we personally believe there's lots of opportunity. So that we think so that we are going to continue to grow.
Neil, how can people find you?
Huh?
How could people find you online?
No, absolutely. So that actually people can go to neiljasani.com, NeilJesani.com, and they would be able to see the information. There's a phone number, email. They can actually get in touch with us, and we will help them to find some money.
Thank you, Neil. We went way over time because you have so much wealth of knowledge and wisdom, and I appreciate you sharing it with me and my listeners. Thank you for your time, Neil.
Absolutely. Thank you for having me, Michael.
Have a good one.
Bye bye.